Hey there, working in payments for quite some time and then spending time with financial institutions and industry partners focused on fraud and risk, I've seen just how much the cybersecurity conversation has evolved over the years. I think about that even in my own life. I was traveling recently to a conference when I got a fraud alert from my financial institution on my phone about a charge that just didn't quite look right. And I was able to respond quickly, confirm what I needed to confirm, and then keep moving on without disrupting the rest of my trip. It was a very simple experience, but it left a real impression. That kind of protection and ease is exactly what builds trust. Not that long ago, cybersecurity was often viewed as an IT issue or a compliance box to check, but today it's something much bigger, and it's tied directly to consumer trust. And for community banks and credit unions, that creates both pressure but an opportunity as well. And the research backs that up. In the American Bankers Association's 2026 fraud survey conducted by Morning Consult, 45% of consumers said that financial institutions are the organization they trust the most to protect them from scams and fraud. That's well ahead of fintech companies and obviously social media platforms. To me, that says a lot. Trust is still one of the most important things a financial institution has from a competition perspective. Consumers are dealing with phishing attempts, fake text messages, account takeover schemes, and the increasingly sophisticated AI-driven scams. They want to know that their financial institution is looking out for them. That is where community banks and credit unions, in my opinion, have a real opportunity to stand apart. Community banks and credit unions have always had a relationship advantage because they know their account holders and they know their members. But now, those relationships have to hold up in digital channels too, not just in the branch. Consumers pay attention to how quickly those alerts go out, whether suspicious activity is caught, and whether digital tools feel secure, and whether communication is clear and proactive. The ABA survey also found that 96% of consumers who received fraud alerts from their financial institution found those alerts valuable, and more than half had received fraud alerts about suspicious activity. That is an important reminder. Fraud prevention is not only about reducing losses, it's also about reinforcing confidence. Every alert, every educational touch point, and every conversation about security helps build and reinforce trust. So this also matters from a strategic standpoint. Large institutions certainly have bigger budgets, and fintechs may have polished their user experience, but community banks and credit unions still bring something incredibly important to the table, and that is credibility. Consumers still connect financial institutions with stability and accountability and security. In that same ABA research, 72% of consumers said banks do more than any other industry to protect them from fraud, and that is a meaningful advantage. And it's certainly one community banks and credit unions should lean into. Cybersecurity can't stay behind the scenes. If consumers already place this level of trust in financial institutions, then institutions need to reinforce that trust intentionally. That means many things: talking openly about fraud prevention efforts, investing in your employee education, communicating emerging scam trends to customers and members, participating in industry collaboration groups, sharing fraud intelligence across the financial ecosystem, and making cybersecurity part of your institution's brand promise. One thing I hear again and again at conferences and fraud forums is that fraudsters are very good at collaborating. Financial institutions need to be just as committed. The institutions making the biggest impacts are the ones that are building partnerships, working with payments associations, participating in information sharing networks, and staying plugged into the broader conversation. That is especially true for community banks and credit unions with lean teams and limited resources. The good news is you don't have to outspend everyone else to lead. You can build on the strengths you already have by staying informed, staying connected, and staying proactive. Because when trust is strong, growth follows, and when consumers trust their financial institution, they stay longer, They adopt more digital services, and they deepen relationships. They refer friends and family, and they are less likely to leave after a fraud event. That is why I don't see cybersecurity as just a defensive expense. I see it as an investment in loyalty, reputation, and long-term strength. The institutions that will stand out are not simply the ones with the newest technology. They'll be the ones that pair strong security with strong relationships. And in my view, that is exactly where community banks and credit unions can lead. Until next time, stay safe out there.